Hi everyone, happy April. Brenna Baucum, Collective Wealth Planning. It's been a bit of a noisy few weeks in the headlines between geopolitical tensions, questions about oil prices, and just general uncertainty about what might come next. It would be completely reasonable if you felt a little bit unsettled watching the markets lately. We've seen some of that show up. The S&P 500 is down about 6% year to date as of this recording. And while that never feels great in the moment, it's well within the range of what we'd consider pretty normal market volatility. And that is really the context I always want to come back to. Market pullbacks are a regular part of investing. They don't feel good, but they are expected. And historically, they've often been followed by recovery over time. In fact, a recent piece from CFA Ben Carlson looked at what happens to the markets when they fall 10, 20, and 30%. Going back decades, the data shows that forward returns over the 1, 3, and 5 years after those pullbacks have generally been positive, often meaningfully so. Now, of course, I would be remiss if I didn't say past performance is not a guarantee of future results. And the hard part is we never know how far a downturn might go before things recover. And that uncertainty is, of course, what creates the feeling of risk in the first place. At the same time, markets don't move on headlines alone. Even with everything going on globally, markets are being supported by some pretty solid fundamentals. Things like a relatively strong economic starting point, rising earning expectations, and continued investment in areas like artificial intelligence. Historically, geopolitical events tend to create short-term volatility, but longer-term market outcomes are usually driven more by the economy and corporate earnings than by the headlines themselves. So when things feel uncertain, I always come back to 3 steady anchors: staying invested in a diversified portfolio that's aligned with your goals, making thoughtful decisions around spending and saving, and trying to avoid reactive changes based on short-term news. Those decisions tend to matter far more than trying to predict what happens next. With that in mind, I want to share this month's resources. First, to read, I've linked to Ben Carlson's recent post that I just mentioned, which includes some really great charts showing typical market volatility alongside what recovery has looked like historically. To watch, we have a new blog on 457B plans and the 3-year catch-up, an important planning opportunity for my Oregon PERS people getting close to retirement. And to listen, NPR's Life Kit. The recent episode has a short, practical takeaways on tax scams and the pitfalls of online advice, especially this time of year. We're also sharing our quarterly catch-up with a few personal updates from the team and the firm, along with an invitation to our April webinar designed for women. As always, if any of this has been on your mind, feel free to reach out. The headlines will keep changing, but your plan should be built with that in mind. Thanks for watching.